All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and it was a very negative day, the worst day in about 3 weeks for the S&P 500, but the most important thing for 2023, it might very well be starting right here, and that is the relationship between bonds and the S&P. So I want to start with something. We were talking about it today. We have seen it a couple of times, but now coming into the CPI next week, coming into Jerome Powell, the end of the year, and everybody talking about recession, it might start to break the trend. And what I'm talking about is really since 2022, even the year before that, there has been a positive correlation between bonds and the stock market. So what that means is that if the bonds went up, the stock market went up with it. If the stock market went down, the bonds would come down with it. So this may seem normal, but in the history of Bondlandia, that is not how it used to work. You know, why did we make so much money on TLT back in 2020 and all of that? Because when the market went down, the bonds went up, there was a big rocket. And then all of a sudden, after the pandemic, the reopening, all of these factors, you'll notice the correlation has been huge. Now, they're not always going to match up, but the thing that has been happening over the last couple of days, you'll notice these last 4 days, the bond market hasn't gone down with the stock market. They've moved up together. They've moved down together. Again, just imagine this is the last quarter of what you've been dealing with. And as the market went up, the bonds went up and you can see it. But as of late, it has been very, very weird. So now why I'm bringing this up, because this is a giant divergence in the making. And what I'm trying to say here is coming into the CPI, this is either going to bring the bonds back to normal, how they used to operate, or something is going to snap. Either the bonds are going to have to shoot up and catch up to the S&P, or more likely the S&P will shoot down if the bonds end up coming down. So this is really, really huge. This was something that we brought up today, but you'll notice the bond market went up, the stock market went down, and like we said, it was a pretty sizable day. It was a pretty sizable move on the bonds to the upside, and it was a pretty sizable move to the downside. So there's a lot of jitters. There's a lot of reason. I have some of the explanation as to why this happened. I got completely washed on the ES2. We're going to talk about that, but I hope you're ready for the events and how this is setting up for the end of the year. I mean, there might be some fireworks, so I hope you're ready. But drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. And if you know it, you know how weird is everything, huh? Oh, you feel me? You feel okay? Run it, baby.
Walking to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, let's start with why we had such a big drop. There was no news. There was nothing really behind it. If anything, you can argue this has been the reaction from the non-farm payrolls, even a lot of the bulls like Morgan Stanley's Michael Wilson backing out. But it seems like Wall Street, a lot of the analysts, everybody is pinning this on the bank CEOs. So we made a play on Bank of America during the day, but Goldman Sachs' David Solomon, JP Morgan, Jamie Dimon, I call him JP Dimon sometimes, but they were all speaking and they painted a pretty grim outlook for 2023, both the economy and markets, and even a couple of them, I want to say all of them, they announced some sort of layoff. So a lot of people were saying this kind of factored into it, but like I'm telling you, it seems like the bonds were the bigger story. So I gave you the quick rundown there in the beginning, but here's something very easy to understand, and just don't forget what happened with China in the last couple of days or couple of weeks. Remember I gave you that China news and they had to halt their bond market because everybody was selling out the bonds to go buy stocks? Well, yeah, it's kind of the opposite here now, but nobody has been halted yet or anything like that. But essentially, this is the age-old adage of the bonds, and this is why it's been so weird in 2022. But the whole logic is that if the stock market is selling off, usually people will be buying bonds, and vice versa. If people are selling bonds, they're more likely to go and buy stocks. Again, for 2022, that's why this has been the worst year for this 60-40 portfolio, 60% equities, 40% bonds, because everybody, the boomers thought this would protect them back in the day, because it always has. But they were thinking, well, okay, market gets clapped, the bonds will take care of it. But in 2022, market got clapped and the bonds went along with it. So this is why I think it's very important, because you're like, well, wait a minute. Why are the bonds now breaking this trend that they've been following for the last 2 years? And then you see a sell-off. Not much news, but again, we can't pin it on the non-farms. But this is telling you something, and I really think this is going to be the big story. We may be early, and it's only been now a couple of days. So that's why we want to see what's up. And just remember, that's why I closed my other shorts and held the bonds short, because I was like, well, if anything, then if the market does go down more than I expect, I was assuming that phenomena would play out, but maybe they're getting squeezed. Maybe people are getting ready, or they think CPI is going to be good. And then the final reason why people would be buying bonds, besides just selling out of stocks, not only does it provide a high yield coming into next year, it is also a safe haven, just like the yen. So I kind of just packed all the reasons into there. Hopefully you're following along. You could go back and rewind it or whatever, but this is developing right now, and I'm telling you, this will be the most important thing for 2023 until we get the data or find out about employment and all of that, or stagflation. But that is key number one. Keep that in mind for what happened today. Now, coming into tomorrow, I brought this one up as well, too. You will be getting unit labor costs tomorrow, and this could feed the whole wage price spiral narrative, but watch out for any more bearish comments, CEOs, hirings, firings, because now with this movement, and then if the bonds keep catching a bid, maybe you'll watch some more bearish comments, or maybe bad news will play out as bad news, but we will see what happens. But I'll tell you this, I got to add this one. Part of what you're seeing today, if everybody's rushing into the longer end of the bonds, you'll notice the short end, they caught a bid, but not as much. That means there's further yield curve inversion, and well, that's what we have today. The yield curve is getting as low as possible. Well, just imagine when I was telling y'all where the yield curve was, I was like, it's really happening. So it's getting kind of interesting now with all of this coming into 2023, but keep that in mind. Also, be on the lookout for potential Russian escalation. We've been getting a lot of news. You've had the price caps, and I know the FIFA World Cup is going on, but it's relatively been kind of quiet. But a lot of people have been asking me about this. I looked at LMT today, and I think it's interesting. I'm not ready for it, but in this type of marketplace, if we start breaking through the levels like we have, maybe something else comes up. But keep that on watch, and then any other commodity underperformance or comments related to that or to the recession. That's why I'm bringing up commodity underperformance. This might have some effect on the market. Other than that, though, let's see if we get the same setup like we've gotten over the last 2 days. We'll see how that data is able to move things, but we're really going to either follow the levels, or I would be following the bonds and see if this phenomenon keeps playing out. But keep all of this in mind, and now bringing it to the end of the week. We still got a couple more days left, but you just got to survive till Thursday. That's at least what I'm telling myself. Again, I got washed, baby. It's okay. Don't worry. But that's when we're going to get jobs data, and really that is going to give us a lot of info considering what happened on the non-farms, or we'll be able to determine whether or not that really was a big effect. And then after Thursday, you're getting that double whammy with the Friday. You're getting PPI and consumer sentiment, but I'll just tell you now, right? It's very simple. All bets are off. A couple days ago, we started this week right above the 200-day moving average. Today, we went below the 100-day moving average in 2 days. The levels have not been respected. So this is kind of one of those instances, especially if you're witnessing a bond phenomena. Just be very careful out there. I'm even telling myself that I got to watch out with my plays too, but we got to make it here, see how the data impacts us. But again, all of this is setting up till next week, and I really think CPI and Powell, that should even confirm what the bonds are about to do coming into the end of the year. But let us get into the plays. So, right off the bat, I made a bunch of different plays. We'll go over what I'm holding. Again, that ES killed me. I was like down like 8,000, 9,000, something wild, but wasn't too bad, and I did decide to make a lot of plays. Even though we didn't get bounces, it wasn't good to short, but I did take this play later in the day after watching the bonds and everything else, and I think it's quite interesting. So shout out to the Chads. I know Mosby has brought this up, and a lot of you who have just been really involved in the game, you know how it is. XLU is utilities. This is a defensive name. We've talked about, well, sometimes utilities do good. Sometimes they do bad during the recession. It's like good and bad at the same time, and you got to be careful. But this is the reason why I wanted to go to it. If people, or if there's some logic to justify being defensive with the bonds, I'm saying, well, you have noticed a better outperformance on the Dow today too. But the way I'm keeping it in mind, XLU would be a defensive, whether it's now or coming into next year. But I just like the risk to reward. It's literally $10 up, $10 below, leading to either the latest high or low. So it's like 100 shares. You can make 1,000, lose 1,000, and then on top of it, I believe there is a dividend coming up here in a couple of days or a couple of weeks. So I like that. Let me show you the chart. I think I'm getting too excited. I feel like I'm yelling. That's why it's like slight voice cracks. But as you can see here, I grabbed 100 shares at, I believe, 71 or 70.90, and this is what I'm talking about. If you go to the low, it's about $60. If you go to the high right here, it's like 78 bucks or something like that. So it can move around a lot. I mean, it's like right above the COVID levels. So you can see it's fairly stable. You got some of that commodity sell-off and everything tied into it. So has a little bit of defensive nature and a dividend. People are going to be looking towards it. I think it could be good. And like I'm saying, just look at all day today. It was very hard to get any defensive positions. Both the bonds already ran. Even if you wanted to short it, you had to pretty much take every short into the lows. So thought it was interesting. I did not like. I had to do it all day. Again, whether it was shorting or buying, I was getting in on the highs more or less. So 70.90, it was kind of high. It felt high when I bought it. So it moved up a little, but that is the thing that I'm worried about. But that is play number one. Keep that one in mind. Then play number two, Netflix. I flipped this today. I'm no longer holding it, but depending on how tomorrow plays out, I would not mind getting back into it. And simply, they have been an outperformer. So if we see more downside, if we end up gapping a level or anything goes a little crazy, I think this one could be good. And just quite frankly, it has a lot of meat on the bone. We brought this up with Meta. They got hit with news today, but you saw it. It was like triple the size of the move on anything else. So it's an outperformer. If nothing bad happens, it will continue to rip faces off. But if we get full-blown risk off or anything like that, there is opportunity. So even this morning, I shorted it at like 704 at 307.25, and then I covered at 303.97. So it's actually a little bit higher than where I closed, but a little bit lower than where we ended up shorting it. But like I was saying, I pretty much had to take every short into the low today, and that was the problem. But take the chart, zoom out a little bit, you'll see what I'm saying in terms of outperformance. And again, it doesn't mean I hate Netflix. We still got it in the long term. We still up on that one. But the whole logic with this one is very simple. If you get real risk off, we keep breaking these levels, things get bad. If the data's bad, if CPI is bad, if Powell's bad, they have a lot of meat on the bone. So that's what I'm looking for. That is play number two. And then finally, play number three. I am still in my bond short, but you probably heard me on stream. I was even contemplating flipping it, but I just said, hey, I think I need to chill a little bit, give it some time. It's a lot of things happening, but I'd rather be late than wrong on this one. But it's pretty simple right here. If this whole bond thing I'm talking about all day here, if it continues and the bonds move opposite to stocks and go back to what they normally used to do, you could start to use the bonds as a short. So we need confirmation that this trend is actually going to stick. It may be too early, but even then, the market may be able to run without it. But hopefully you see what I'm saying here is that the problem was if you don't want to short into the lows, the bonds usually move a little bit less and you could get better positions. But the way I'm looking at it, if we really start to see the bonds hold up and the market go down and they really move opposite of each other, I would not mind covering my bond short and then even going really long on the bonds with bigger size to try to play that, because it just overall might be the best short if that comes back to life. So we'll see how it plays out. I want you to understand the idea. I'm still in the bond short, so we're going to go from there. But I really, really think it's important. And if you guys want to go look more into the bonds and what I'm saying, I'm sure you will not be disappointed. But it's going to take time. There's a lot of macro and it's slow, but like I'm saying, this could be the most important thing for 2023. But as far as everything else and what we did here, we'll get to the plays. As you can see, I started the day covering the meta. And remember, we've been bringing this one up. I got like $3 a share off of the 200. I made like $600 or a little bit under that. I would have made a lot more. It did go down near that 113, and they had more bad news out of the EU today regarding targeting ads. So that added to the pain, and then that's why they also outpaced beyond just the overperformance. So that one was good. I could have made a little bit more, took the profits. Then we got the Bank of America comments very early, and you're seeing that was about 10 minutes after the bell, and this is where a lot of people are trying to blame some of the negativity, and it does make some sense, but I think that just the fear creeping in and also the bonds highlighting what we got there. But that one, I took a quick short on the 200 shares. I made like $150. If y'all hit the options, it was even better there, and it even continued down a lot more, but good entry, took it early once again. Then I went with the Netflix, and like I'm saying, every single one of these, I had to start shorting into the lows. I did not like it. Took the Netflix. This one was, again, just under like $4 a share, like $300 in profit. Took that one, realized it, opened 200 shares on Google, and then another 100 shares on Apple. And this was a little later, but I was like, these are all very late shorts. You are not getting any of the bounces. I was like, all right, man. I mean, it's worth it at the very least. I have the ES and we'll make some back, but I did not like that setup. Then I shorted TSM. I figured they were a chip maker that was outperforming. I ended up covering it only for like an $18 profit, and that was simply because there was news about legislators easing the chip ban. But again, there's even like Apple news and a bunch of other. The news didn't do anything today, man. It was wild, but got those. Then I started playing with the NQ, and I was like, hey, if all the late shorts are hitting, every greedy short was working. I went with NQ short while holding my ES, and that one worked out very well. It was like 11,620 to 11,587, a big flush. I got like $600, $700 net profit. Closed the TSM, then we got 50 shares of PCAR. They announced like a special dividend and increasing their dividend, but only made like $20 out of that. Again, I was doing everything kind of quick here, more or less, or just making sure I didn't hold too much. And then I bought in on the NASDAQ. My opinion, I was like, it's not going to go lower than that range. If you guys have been hearing what I've been saying, I was like, I think we have the guardrails, you know what I'm saying? But it got a little worrisome there, and it started dumping a little bit. So thankfully I had profits, but it started dumping more and more. So I said, hey, I already had the $600 profit. So I decided to close that. Wait, that was the one I closed. This was the original play, but shorted or bought long at 11,575. And again, I already had the upside, so I didn't want to get trapped too much. I made money on the short. I should have just been playing the greedy shorts to protect everything. That would have worked very, very nice, but took a loss on this one, $500 or $400 of the 600. Pretty much only had like 200 net off of the NASDAQ. Closed the Google. It was only like $50 or $100 profit. And then same thing, I think it was like 180 on the Apple on the late short. And then I closed out with the XLU. So still realized just over $1,000 on some of the trades. But now you'll see the other carnage we had to deal with, and that is all of the unrealized. So now here is that ES. I'm down $7,200. It was down $9,000 at one point. And keep in mind, this is on 2 contracts. So if this was a normal 1 contract, it would have been around $3,500. So I'm also keeping that in mind as well too. What's my stop loss? The event, baby. Again, you guys have watched how I do it, but I do it differently. And I'm ready to lose it all, but it is extremely risky. None of this is a recommendation. You do what you want to do. Inverse it if you'd like. Either way, though, I am looking towards the event, and especially now with the bonds. I mean, let's go for some big money, high risk, high reward. So I had that, but I did choose to balance it near the end of the day. Where's the NQ? So here's the MES. Here's the old one. Remember, I was down like $2,000 or $1,500 by the beginning of the week. They went positive for a little bit, but still down on those. But now here is the NQ, and really I was worried about breaking levels, any gap down, and you're seeing, even with the futures up right now, I'm already making a little bit of double, but by grabbing the short, I'm just making sure I'm going to kind of cap the loss until Friday or next week at no more than like $7,000, $8,000, and I think it's manageable. And even after today, I think we could hit the other stuff realize in between, and then go from there. So I think it put a balance on it, but with things getting a little crazy, I said, hey, I don't want to expose myself to too much. I was looking at the bonds, not the NASDAQ, 300 versus 400. Again, one contract versus two, but I think NASDAQ has a little more downside, but now that's the bond play. Still down 400. We were actually almost positive yesterday and this morning, but I'm still going to hold it just because I don't want to move too quickly. And this is part of my original theory on Friday. And if I just kept the shorts from the original theory, I would have done very, very well. So don't want to dump it just yet, but I am ready. If there is the confirmation, I'm going to close this and I'm going to reverse it 5-10 times bigger to the upside. If we truly get the whole sell the market, buy the bonds, it could really be telling, but I don't want to move too soon. But still holding that. The Amazon shares from yesterday down 280. The Disney now getting back down to that 780. Remember, leading in from the earnings, I was down a lot more, but I've been riding this one out and still holding. We made a little bit back on the Qualcomm, which is nice. The XLU is up, and then Yang still down to 600. I may want to average at like the 10 or 11 like we said, but till then, let it do its thing, because as we've been dropping, China has been holding up. So we will see. I still have the Carvana. I need to cut that one, but now he dropped another, like, I think $200, $300 total. So not too hot, but overall, I'm really going to just be worrying about these and focusing on those. But I think it's really going to come down to the events. We'll see how it plays out, but there is definitely a lot on the table, so I hope you guys are ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, amor fati. What's going to happen is going to happen. Use that as your freedom. Do not fight against it, and understand the good, the bad, the ugly, when it's up, when it's down, everything in life. And life is really weird how it all works out, man. But it is all teaching you something. Embrace it. You may not realize the lesson today, but maybe it comes up there later in a year, in a day, in a week. Who knows when, but the whole idea is enjoy it. You got to stay alive. Keep the mindset in the game. And, bro, 2023 is looking crazy. Are you ready for it or not? Who knows? Maybe this whole year prepared you for the whole year of next. Oh, stop. So, Chatadonia, I hope you're ready. I hope you're locked and loaded. I hope you're hungry. I hope you are going to bring the intensity, and I hope you don't give up. Only you can take yourself in and out of it. Only you can get involved in the drama. Don't focus on anything that's unnecessary. Focus on the goal. Focus on your performance. Have the plan, learn from it, and reach the highest form of your potential, baby. But I love you, Chad. Drink that water. I'm going to see you tomorrow. God willing, I'll see you in the morning. We're going to keep playing it, and I love you, and you are blessed. And let's go. Get ready. Oh, it's going to be exciting, Chad. You ready? Are you ready? You nervous? I'm not nervous. Are you? I think don't be more nervous than I am. I cracking voice guy. Oh, okay. Am I making it awkward? Okay, y'all. All right, I'm going to go. All right, hard.